Alright boys, welcome back to another video. Today we're going to be talking about the quarterly theory. If you're just trying to have a better understanding on why these markets move or become more of a consistently profitable trader, this strategy will undeniably change how you view the market and it should increase your win rate. So make sure you watch this whole video to the end and take any notes to fully understand the whole concept. Also shout out to Bowie Jackson for this video idea. Yeah, I literally just learned the strategy off him, so his link will be down below. Alright, enough fucking yapping. Let's get into this strategy, bro. So, we have to understand that price is fractal. What does fractal mean? Fractal means it can work on basically any single time frame. It can work on the daily, it can work on the weekly, it can work on the yearly. And we're going to be going through a few examples today. One on the yearly to show you how you could use it on a swing time frame analysis. One on the daily throughout the Forex market sessions of the day. We're going to be digging even deeper into the 90-minute cycles which happen within the Forex market sessions. Fucking tongue twister. Alright boys, so as we talked about, the quarterly theory has 4 quarters. Each quarter lasting a different time frame throughout the periods of the year, throughout different sessions of the day, and throughout 90 minutes of each Forex session. But let's get into how each quarter actually works and what it actually stands for. Alright boys, so these are the 4 quarters. We have quarter 1, quarter 2, quarter 3, and quarter 4. So in terms of price action, in quarter 1, we want to see accumulation or consolidation. This is when price is not really trending bullish or bearish, but it's just chopping inside of a range. Then in quarter 2, we want to see something that looks like a liquidity sweep or a fake out. So we want to see price take out the high and then reject heavily back to the downside, or we want to see price take out the low and then reject heavily back up to the upside. It's also a pretty good confluence if there's a level of sell side liquidity being taken out or a level of buy side liquidity being taken out. Either way, you want to see price manipulate a high or a low or a fair value gap or even the previous quarter's highs and lows. So after we see price manipulate, you either just want to look for an entry inside of a fair value gap or inside of an order block or demand zone or whatever you trade, or resistance level, whatever, as long as you're taking a trend in the opposite direction that it swept liquidity. And yeah, this would be known as the distribution phase or the trending phase, where price is actually getting a lot of volume and trending in a certain direction to the upside or the downside. Usually it's in the opposite direction of whatever high or low it took out. So then we have quarter 4. Now quarter 4 can continue following the trend that it was previously in. So price would either continue heading to the downside or price would reverse the trend and retrace back on the previous quarter. That's why quarter 4 is known as X, because it can either do one of two things: reverse or extend. So yeah, this cycle is called AM. So yeah, when you're looking at quarterly theory, you want to look at the cycle of AMDX: accumulation, manipulation of a high or a low, distribution, and then X being a reversal or extension. So yeah, pretty simple. Let's have a look at the charts on real-time examples. Okay, so this is the yearly example on GBP USD from 2023 to 2024. So in our first quarter, which lasts from January to the end of March, right here, as you can see that. So quarter 1 is known as accumulation, quarter 2 is known as manipulation, quarter 3 is known as distribution, and quarter 4 is known as reversal / extension. We'll see how the first month plays out. And what do you expect for the first month? We obviously expect some sort of accumulation. We don't really expect price to be making like higher highs and higher lows or trending in a certain direction. We expect it to be accumulating orders inside of this range, and it clearly does that. And the thing is, with this strategy, you can add smart money concepts as well as this to make it super high confluence. So you can clearly see we take out this level of sell side, so that's probably going to push price a little bit higher. So yeah, this is how quarter 2 played out, known as the manipulation quarter. You see price comes a bit higher and it takes out this level of buy side liquidity. Straight after it takes out that level of buy side liquidity, it then once again takes out this level of sell side liquidity and then continues higher. But as you see in this example, quarter one accumulates, quarter two goes up, but if you zoom in, it clearly says quarter two will go into a high time frame PD array. Now I actually don't know when this was made. I just saw it on TikTok. Who knows if they actually fucking predicted the future or not, or it was made after this came out. You can clearly see on the daily we have a big fat daily fair value gap right here. Now to be honest, during quarter two, price doesn't really fill much of that fair value gap. So we let price play out and price fully fills the fair value gap. I think after it's fully been manipulated, you could expect distribution in the opposite direction, and it clearly does that. So as you can see from this example so far, in the first quarter, we clearly accumulate / consolidate in this range. We don't really trend. We're just chopping around in here until we sweep sell side liquidity. And then in quarter two, we go a bit higher. We take out a level of buy side liquidity, and then we internally sweep once again, sending us a bit higher. So this is our manipulation. Me personally, I would say our manipulation phase lasted a bit longer into the start of quarter three. But as soon as we filled this big daily fair value gap, we can see price distribute all the way back to the downside, creating a massive move. As you guys can see in quarter one, price only moved around 600 pips. In quarter two, price only moved around 450 pips. But in quarter three, price moves nearly over 1,000 pips. So in quarter three, price has more volatility than the last previous 2 quarters of the year. So looking at this chart, the best time to trade would have been from July to September, because this is when it would have been the most volatile. And then finally we have our quarter four, which is October to December, and this can either reverse or extend. So let's see what happens. So cool, we clearly see that price has reversed on the previous quarter, because it was bearish, now it's reversed bullish. Another trick that you can use in quarterly theory, if you look right here, it says true opens, the beginning of quarter two every cycle. So the true open, we want to look for that. That's at the beginning of the quarter two. So it's right here. You only want to look for longs above the true, but no, you only want to look for longs below the true open, like right here, after it took out sell side. That would have been a very high probability trade. And you only want to look for shorts above the true open after it took out this buy side, or even up here after it filled the daily. But you do not want to long above the true open, and you do not want to short below the true open. That is one of the rules for trading the quarterly theory. So let's get into the sessions example. So these are our first few sessions. We got Asian session right here, London session, and New York session. I think you guys can already clearly see that we have a nice power of 3 setup. We have consolidation right here. We have manipulation throughout London, which goes into New York. Once again, like the example on the yearly, manipulation sometimes goes into quarter three and takes up some of the time in distribution. And as you can see, we clearly distribute heavily all the way up here. So this is a nice, clean, simple power of 3 setup. Now, if you're going to start using smart money concepts in this as well, you can clearly say that there is a level of sell side liquidity right here. Price takes out the level of sell side. Where's its next target? This level of buy side. It clearly taps into it at London session, sending it back down, taking out these levels of sell side liquidity right here. Nicely wicks it, and you could also draw an optimal trading entry from this low to this high, and you can see it holds it quite nicely. Then scaling into the 5 minute even more, you can clearly see we break structure right here, and we have a nice 5 minute fair value gap that you can long off right here. Target all of this liquidity up here that gets hit, as well as we'll also look for our true open. So the true open, once again, is when quarter two opens. So we'll have a look at where price was when it opened, and it opened down here. So you only want to look for shorts above the true open, as you can clearly see right here, clearly above it, that's a clean short. And as you can see, after it took out sell side, after it manipulated, it was below the true open inside of the 5 minute fair value gap. That is a very clean long you can take. Now, this is live market. I expect price to be reversing back down or continuing higher. I think most likely they are going to be targeting this level of buy side liquidity, so I expect it to continue a bit higher and then maybe reverse. Now let's get into the small 90-minute time frames. So for this trade, we want to start plotting when London opens. You start plotting every 90-minute after a session opens. So we go from 9 to 10:30. We then go from 10:30 to 12 o'clock. We then go from 12 o'clock to 1:30. And then we go from 1:30 to 3 o'clock. So yeah, I'll just finish plotting this out for you guys, and then hopefully you guys can understand it. Okay, you know what? We're going to bar replay this to make it more interesting. So we're obviously in quarter one right now. Price action isn't that great. I wouldn't say it's really ranging. So I'd say that this quarter is accumulating. Next quarter comes along. What do we expect it to be? It's always got to follow the sequence. Next quarter is quarter two. And I guess you could say it was manipulation, because if you use smart money concepts like I do, you could say that this is a nice little internal buy side liquidity sweep, as well as it is clearly above the true open, so that is good for shorts. So after we see price manipulate to the upside, what do we expect price to do? We expect price to distribute to the downside, targeting what? Targeting this draw on liquidity, targeting this low, and yeah, let's see how it plays out. But you can clearly see that there was a distribution to the downside after it accumulated and manipulated. So what do we expect after distribution? We expect a reversal or an extension. So we see how it plays out, and big extension back to the upside. So now we're back at square one. We're back at accumulation. But also notice what time it is. 9 p.m. 9 p.m. right here. And where did we open? This was the true open. So we're only looking for shorts above the true open, and we're only looking for longs below the true open. So we expect accumulation to be the next phase. To say that this whole area is accumulation, because it's not really trending. It is just playing around. It's not really rallying. So what do we expect next? We expect manipulation. So mixing in some smart money concepts again, we could think that this low is sell side liquidity, and we expect it to manipulate and go below the true open for an entry. Price comes in, manipulates this low of sell side liquidity, and then just absolutely rallies off. Now I did trade this live, but unfortunately I did not get an entry. It does go slightly below our true open. If you want to call it there or there, it's debatable. A good entry for this would have been off this 5-minute break. If you can see, there is the tiniest wick that goes in here, right here, and yeah, that would have been your entry. Alright, now this is the good bit. I'm gonna look at the same bias, not only using quarterly theories, but now looking at it with a smart money concepts market maker model bias, and I'll show you guys how it looks. So as you can clearly see, this is the same time. This is at 12:30 a.m. and this example is clearly the same spot at 12:30 a.m. So yeah, let's have a look at the smart money concepts bias. So we're clearly in a bit of an uptrend. You could say we are sort of making bearish market structure, because we have made a high, a lower high, a lower high, but we have created a higher low, so it's kind of invalid. And we're clearly holding this 4-hour fair value gap. Scaling in into the 1 hour, you can clearly see that the 4 hours condensed nicely into this 1 hour fair value gap. So we'll just name that the 4 hour plus the 1 hour fair value gap. Unfortunately, we didn't get a 1 hour break, so that's not the most high confluence, but this is still a very clean model in my opinion. Scaling down into the 15 then. So I can't remember who said it, but somebody said if you're looking for a market maker model with a 4 hour fair value gap, you look for 15-minute confluence. So we start looking at this like sell side of the curve, and we want to see it return up to this level of buy side right here, this draw right here. We have equal highs right here, and we have some more draws along here. Sorry, that's really shit to look at. We've got buy side right here, draws up here, equal highs right here, and then on an even bigger time frame, if we scroll back out into the 4 hour, we're inside of another market maker model inside of this 4-hour fair value gap. So we're inside of a market maker model inside of a market maker model. Sell side of the curve, this is our overall buy side liquidity target. Scaling into the smaller time frames, can we get any more take profits? Most likely you could target this high as well. So we have a lot of targets for buy side, and we're clearly holding two very big 4-hour fair value gaps. Buy side of, we took out sell side of the curve. You could easily say that this is another internal sweep right here. Then we clearly break structure on the 15-minute right here off this 15-minute high, and we're holding this nice 15-minute fair value gap. Now, you could probably press buy off this straight away and you'll probably hit all TPs, and that would be a super nice trade. But like we said, we were trading quarterly theories. We noticed we had a manipulation on this low. We noticed that after we broke structure on the 15 and after we were holding this 15-minute fair value gap, we noticed that we also broke structure right here on the 5-minute. And then we had this super tiny 5-minute fair value gap that it barely just wicked into, as you can see the wick right there. And yeah, that should have been my entry, but unfortunately I did not enter. And then if you wanted even more confluence, you can clearly say that price wicked the optimal trading entry to the tip. You enter on that 5-minute fair value gap. Stop loss is at this low. Take profit 1 is clearly at these equal highs from here and here, making it a very strong target. Very high probability that you're going to hit that. So you're mixing a smart money concepts, double market maker buy model mixed with quarterly theory after it just accumulated and then manipulated, so you know it's going to distribute straight after that. Like this, do you see how all of this stuff is starting to mix together to give you these super high probability trades? And then obviously price fucking absolutely smashes your first take profit. You target this internal buy side from the first market maker model, but then you go up and then you smash your overall buy side target, giving you a nice 8 risk to reward, 93 pips on GPP JPY, using a market maker buy model mixed with super clean quarterly theory, accumulation, manipulation, distribution, reversal. The cycle starts again, accumulation, manipulation. Sure, it distributes a bit, but then it comes back, it distributes to the downside, and then it reverses all the way back up to the upside. And then yeah, I guess it didn't really accumulate here, but maybe this is the accumulation range for the next foreseeable future, and you don't want to trade it until it breaks out of this range with manipulation. That's a high likely chance that I see, and I'll show you guys one more example on GBP/USD. Okay, whenever I trade Asian session mixing with London, so around 7 to 9 p.m. New Zealand time, I always look to draw my sessions after 1 p.m. I've just noticed if I start drawing my sessions 30 minutes earlier, it works out better. It might be because New York closes at 10 p.m. and we're just counting 2 sessions in between them. But yeah, I like to start counting my sessions at 1 p.m. if I'm trading London and Asian. But if I'm trading New York and London, I'll start counting my sessions from London Open. So yeah, our first phase that we come into today was manipulation. As you can see, it clearly manipulates this level of sell side liquidity. Manipulation, cool. Where are we going? To the upside. Cool, that's distribution. We're either going to reverse again or we're going to keep extending to this level of buy side liquidity. So we reverse for a bit right here, and now we're back into, what do we expect? Accumulation. So we don't want to see much price action. Yeah, just look at that. Look how fucking choppy it is. Okay, anyways. Quarter 2 opens again. We expect what? Manipulation. So what can we expect to get manipulated? Maybe these 5-minute fair value gaps, maybe this level of buy side liquidity, maybe this previous high from the consolidation phase. And we also have our true open right here. So we want to see price be above it for shorts and be below it for longs. So let's see what happens. What does price do? It manipulates these fair value gaps, it manipulates the previous high, and it has a big rally down. This is the clear manipulation. So now we're expecting distribution. Are we expecting distribution to the upside to target both of these highs? Well, currently we're underneath the true opening, so we could long, but let's just see how it plays out. So it comes back up, and we've filled this 5-minute fair value gap. Now, this is where I'm going to go again into smart money concepts. Okay, let's use smart money concepts to create a bias now for where we were at 9:20. So on the 4 hour, we don't have much. On the 1 hour though, we did just break structure to the downside right here from 7 o'clock to 8 o'clock. So the 1 hour is bearish in my opinion. On the 1 hour break, we also had a 15-minute break right here. And if we scroll out onto the 4 hour and we draw an optimal trading entry from the swing high of December 28th to the low on the 5th of January. Remember, like, bro, this is a super high time frame optimal trading entry. We can see it's used as support. It's used as resistance here, it used the top there as resistance, and just before it used it as resistance as well. So we can guess that price is going to be continuing bearish. So we'll just mark that the high time frame optimal trading entry. We got a 15-minute break plus a 1 hour break. And then scaling in even more, we clearly saw that 5-minute fair value gap that we marked out from before. And then we also have another optimal trading entry from this swing high to this swing low, and we're clearly inside of it. So what do? We scale into the 1 minute, we look for shorts, as well as the true open from London started at 9 o'clock right here. So that's the London true open, and then you also had the previous true open from somewhere here around it. So you have two true opens where you're above the 50% mark, so that's prime for a short. Scale into the 1 minute, clearly see we fill the 5-minute fair value gap straight away on this first candle, respecting the optimal trading entry. You can clearly see we break structure off this low right here, and we have a 1-minute fair value gap. You press sell as soon as it comes into this fair value gap. You put your stop loss at this high. You might have got stopped out with spread because that's like 0.9, but who knows, maybe if you put it here, it would have been a better trade. And then where's your take profit one? You can either do the 1-minute fair value gap, you can do this one down here, you can do this 15-minute draw on liquidity right here. You go back onto the 5-minute, you see a nice 5-minute fair value gap right here, which lines up with your draw on liquidity. You see another one right here, target that, and then you see another one right here, target that, and then you have this fucking weird bum rape candle, and then you have your overall sell side right down here. So let's just say you shorted there, press short, and then it absolutely fucking smokes all of your take profits, giving you a nice 7.5 risk to reward, hitting all your take profits, not going anywhere near your break even. And then if we go back on GU and look at this, we can clearly see it distributes to the downside, stops around here, and then it continues distributing instead of reversing. It's a nice extension in this phase for quarter 4. And then yeah, that, guys, is how you use quarterly theory mixed with smart money concepts. We'll just go over the cheat sheet once again. I'll leave it down below in the comments if you guys want to study it and check it out. And yeah, hopefully you guys enjoyed the videos. Hopefully you guys learned something new today. If you did, make sure to leave a like and subscribe, and leave a comment down below if you want to see anything.